Hello, I'm Bernard Hickey from interest.co.nz and welcome to 90 at 9, our morning briefing where you get everything you need to know in 90 seconds at 9 o'clock, starting now with news overnight from the United States that the credit crunch is far from over. The US Federal Reserve has lent another $25 billion to US banks at a rate of 2.754%, so very cheap money, and they've said to the banks don't have to pay it back for 84 days. Normally, they have to pay back within 28 days. Also, Merrill Lynch has downgraded Bank of America, Morgan Stanley, Goldman Sachs and Lehman Brothers. It says investors are significantly underestimating the scale of the credit crunch. And spreads between Fannie Mae bonds and treasuries widened to their highest levels since March. Back then, Bear Stearns was in deep trouble. Now these spreads, so the difference between the interest rates charged by Fannie Mae and by the US Treasuries, the safest type of debt, when they widen out, that shows that people are worried about the safety of debt offered by Fannie Mae, the big mortgage provider. Some people are concerned that defaults seen in the US subprime market are now spreading into the prime market. So people who everyone thought were good credit risks, maybe not so good after all. Meanwhile, in Australia, Commonwealth Bank has pulled out of a deal to buy ABN Amro's Australian and New Zealand operations. It said that was because of the shock write-down of CDO losses by National Australia Bank and also ANZ National's profit warning in the last couple of weeks. It says international investors are now much more nervous about Australian banks. Previously, Australian banks were seen as not connected to the subprime, not facing the same sort of losses as other banks were. But that's been put in some doubt. So, the credit crunch really is far from over. I'm Bernard Hickey for interest.co.nz. That was 90 at 9.